Hey, Scott. Thank you, buddy. Hi, Jamie, my friend. How are you?
I'm doing okay, Andy. How about you?
Oh, man, doing good, doing good. And yeah, got a decent crowd. Thank you. Thanks for everybody for pulling yourself away from the congressional circus that's going on today, and coming and hopefully enlightening yourself. Uh, let's dive into it. But before we do, let's first go over the disclaimer. All right, we're going to be talking about some ideas today, looking at some charts and some setups and things like that. Having a good time. Just remember, guys, that nothing that you hear or see today should be construed as investment advice. Okay, if that's what you need, please see a broker or a registered advisor, somebody who can act in that capacity. All right, guys, we are sold out for our summit of 2018, but that does not mean you have to miss out, okay? We have a great lineup, and we are going to be live streaming this, okay? So you can watch it live on YouTube, okay? If you want more information, please go to trade-ideas.com/live stream. And yeah, you don't want to miss that. It's going to be a great lineup. And sorry if some of you guys could not make it. We understand, but do catch it on the live stream. All right, let's talk about, for the people in here for the first time, we always like to talk about our 5-star support, education, and training here at Trade Ideas. Okay, we do understand it's a very powerful software and at times can be daunting to people, but do not be afraid, okay? We take you by the hand. We kind of walk you through the process during the first week with our TI University that I'll talk about in a minute. And then also we have webinars throughout the week, and you can see them there on the left side. One of them that is missing is the Tuesday webinar, which is hosted by Steve, and I ride shotgun to him on that one. But Monday through Thursday, same time slot, 5 Eastern time. You can see the lineup. It's usually myself, Steve, or Jamie, a combination of the two. But don't miss the Q&A on Wednesday. That is with our CEO, Dan Merkin, and our CTO, Brad Williams. They always give you things that are coming down the pike. So, and before I move on, let's talk about the traders room, okay? If you are in here and you've never been to the traders room, I know most of you have, get in there. It's free to everyone. You can watch the software live, and not only that, listen to a professional use it, in Barry Anderson, as he navigates the market. So some great content throughout the week, and then on Friday we throw in a 3-hour Q&A support session for any questions that you may have. It's just an open forum, so do not miss that if you have any more questions. And let's talk about TI University, what I mentioned at first there. When you sign up, guys, you can register free, and this is also free, TI University. And what it is, it's classes each day of the week, 11 Eastern time, Monday through Thursday. Starts at 1:01 on Monday and finishes up at 4:01 or with 4:01 on Thursday. So each class is about an hour long, and then at the end of that, you got about 20 or 30 minutes left for Q&A on top of that too. So you can see, guys, we equip you, and I can guarantee you by the end of the first 1 week with this software, you're gonna be building some really cool alerts. So. And not only that, we share all of our favorite ones with you. It's built into the software. All right, let's. One last thing I have to talk about, and this is going to be coming out real soon. We talk more and more about this in our meetings each week. Okay, and this is Brokerage Plus. Okay, if you have premium, you're going to be grandfathered in. Okay, but once this comes out of beta, it will no longer be free for the premium people. So jump if you're straddling the fence right now between standard and premium, and you're really thinking about auto trading somewhere down the line, you might want to go ahead and get that premium package. Okay, it's going to be worth it, so you won't have to cut a big check down the road to get Brokerage Plus. More information can be found at trade-ideas.com/beta. All righty, let's go and talk about our agenda for today. And it's kind of a short agenda, but that doesn't mean it can't be packed with a lot of good stuff. So we're going to talk about the market recap. and then as we always do, we're going to talk about the Holly recap, go over that. Jamie will take us through some trades. He's probably scouring the landscape right now for them, and then I'm going to bring this back up. I know you guys have seen it on my layout, and I've talked about it quite a bit, and I just want to basically revisit that because I am still seeing some really good setups in this thing, especially for those who like to swing trade, but it can also be used for day trading. It's great, especially for the new traders, because it has defined entries and stops in this strategy, and I'm going to kind of break down this strategy, and then we're going to go back and look at a few trades that the symbols were sitting on this alert at the close on Monday, and I'm going to kind of break down the strategy, how it works, and show you some examples of some great moves, even though the market really hasn't done a whole lot. All right, so let me back out of this now, and we will kind of pull up the old market recap and just kind of go over together if I can get it there we go. All right, here is the SPYs. This is we like to use the SPY. This is basically an ETF tracking the top 500 stocks, and it's a very equally weighted or favorably weighted, more favorable than the Qs, and of course the Dow, which only has 30 in there. So we always like to use this one to kind of as a benchmark. And not only that, this is what all the hedge funds, mutual funds are always measured against. And I've traded with a hedge fund before, and I can tell you, yeah, everybody is measured against the SPYs. All right, so let's see what we have going on right here. I mean, it's, everything is still intact. Now that I see it, let me go ahead and draw this. I didn't even notice this until now, but let's just go ahead and see if we can't bring this down here. That's not going to work. Let me do it this way. And let's see if we can draw a little trend line here and see what we got. Okay. Yeah, we got a kind of defined trend there. We're a ways from it. Okay, we're still above the 50 here. That's our trend line. I really don't see a whole lot of one here, but this is our major trend line, I would say, going back for several months. So I'm not saying we're going to go down there, but if we cannot hold these moving averages, you can keep seeing we keep trying to dip below the 20 and pop back up, close right in between the 10 and the 20 today. But if we were to break this and then come back and this 50 start flattening out a little bit, we could have a date with this level right here. And this is kind of what we call a pivot point. If I draw the mark up there, you can see kind of got a nice little pivot point, a couple of highs here, finally breaking through, going sideways, popping, coming back and testing it. So maybe if this kind of action keeps up, we may have a date here to this very important pivot line that could also kind of correspond with the 50 or and the trend line there. So this will be interesting to watch if we do kind of bleed off or just kind of maybe go sideways and barely kind of bleed down. We could eventually come back to a critical level here. And I see some questions coming in. Looks like Jamie got them. All right, so that's it for the spiders. Not a whole lot to talk about. We obviously hit an all-time high on this date right here, and we've been pulling back ever since and just kind of slopping around, going sideways right here. No harm, no foul, bulls will tell you. Not too much of a bearish case to be made here. Let's take a look at the other. And obviously the Q's a lot more better. It looks a lot better than the SPYs do. I mean, it's popped up out of this range, nowhere near its moving averages, and not far from an all-time high right here. So looked like maybe the Q's had some leadership today. Let's see what the IWM did. Nothing like the others. Okay, this is on obviously it looks like about a 6-week low. Kind of a lot of congestion going back over here. Nothing real defined as far as any, but it's kind of a lot of slop. So yeah, one could classify this as kind of a pivot level, just with all the congestion we have, and it looks like that's exactly where we're getting hung up. But not a lot of strength there. It looks like money is coming out of the IWM and maybe going back in the NASDAQ heavy Qs right now, or the tech heavy NASDAQ. real quick on the diamonds, not going to spend a whole lot of time here because just once again, it's 30 stocks, but looks a lot like the spiders recently hit an all-time high, pulled back, and just kind of slopping around. But Jamie, I'm not seeing anything to alarm me, but yeah, just kind of time will tell. I will say this: it is end of month. Okay, tomorrow is pulling up the calendar here. Tomorrow will be the last trading day of the month, and then we'll start a new quarter. October, November, December. We'll start that on Monday. So wouldn't be surprised to see the market kind of hold up tomorrow, just based upon end of quarter funds holding it up. So those statements will go out and look impressive. But we'll see what happens. Who knows? Jamie, anything you care to add to the market recap?
No, not really. It was just kind of a unusually slow day is the way it felt, even though the major tracking ETFs finished with normal relative volume and whatnot. But as you briefly alluded to earlier, I think I think there was a lot of distraction in the media today, and
Yep.
I think everybody was just kind of transfixed on it. Having said that, it was kind of hard today to pick the direction because we had that small gap up. Went all the way to the tops and then tried to come all the way back down to the bottom of the SPY range today.
Yeah, here it is.
So, up and down action. I don't know, not the easiest action to trade. A lot of the times once we get up there, we kind of flatline into the open, right? But not today. So a lot of these stocks, a lot of these positions that people were holding on to, they ended up getting rolled out. So not the easiest day to navigate.
No.
That's why it was interesting to see, I can't remember the last time I saw the Holly modules all have the exact same amount of trades, 15, 15, 15. Another kind of weird little anomaly there. And we got Holly Neo up a little bit on risk on, and we got Holly 2.0 up the most on risk off. So right there, that tells you kind of what we're seeing on the chart, Yeah. And what else? Oh yeah, the chatter that you saw in the questions panel there, just for some entertainment purposes, go ahead and pull up Tesla and show your post market.
Yo.
Zowie. The SEC has decided to sue Elon Musk remember when he tweeted that they might take the company private?
Yeah.
Well, I guess that was illegal.
You think?
but it took them a while. How long ago was that? They're like, was that? Yeah. And of course, some guy's trying to make his career by suing Elon. So that'll be interesting to see moving forward what happens. When's the last time you heard of the SEC suing somebody? Usually they're just enforcing, right? Enforcing rules, going after the evil people or whatever. So this is going to be interesting, to say the least. Is it going to keep on going? But hey, crazy things are afoot. They always are. But usually the spotlight's always on Elon and his Tesla, Solar City, the Boring Company, SpaceX. So who knows? We'll see.
I always get tickled when the SEC sues a financial, one of the big boys, Goldman Sachs, because the big brokers slash bankers will do something wrong, totally wrong against the public, and basically just take money from them and steal them, and then the SEC turns around and sues them, and I'm like, okay, where does all that money go to? It doesn't go back to it doesn't go to the guys who got screwed. Yeah.
Yeah. So let's just say the vampire squid, which is Goldman Sachs, does a bunch of shady stuff and makes $2 billion.
Yeah.
Well, then they'll be like, oh, you're bad, you're guilty, we're gonna have to punish you.
Slap on the wrist.
And then they made $2 billion. We're gonna fine you $200 million. Okay.
Exactly.
Fine.
Yep.
Fine.
That's how it works.
We'll walk away with $1.8 billion. Guess where the $200 million goes? Right in the coffers of the SEC.
Exactly.
So, anyway. That's how the cookie crumbles, ladies and gentlemen. And Andy and I have seen this time and time again over a 20-plus year career in the business. All right. Well, I guess if you're ready, Andy, we can talk
Yeah,
about
go ahead
this
and take
Holly
it. I don't
activity.
have an intro. I don't have an intro into it, so yeah, go ahead and steal it,
Yeah.
and I'll be
Okay.
back in about 30 seconds. All right.
No problemo. So I'm assuming everybody has eyes on my screen. Welcome to my desktop. And what I've got currently pulled up is Holly Neo. Now, as I was saying earlier, we got Holly Neo barely up any, maybe call it a scratch with slippage, risk on. But we've got Holly 2.0 up $1.46, risk off, kind of reiterating or confirming what we saw here for the, inverted, well, inverted horseshoe pattern, I guess you could call it on the long term, or the daily spread there. And of course, doesn't seem that the spy's taking the Tesla news so hard. It'll be an isolated incident, but it will be interesting moving forward, seeing how that plays out. Now, looking at the all trades blotter or Holly Neo, things that you don't normally see, right? Like right up the top here, top performing trade and risk on is a short in CAG. Now let me go ahead and click this back over to 15 minutes. Okay, so classic risk on opportunity here. And you don't have to be an expert technician to recognize what's going on here. So we've got the best winner on risk on the short on CAG, showing Holly reduced the risk here and took an 8-cent loser. Ended up being an 89-cent winner at the close. Now, this is about as good as it gets when we are contemplating going risk on, which, by the way, for the new people out there, Holly has a rule set once she enters a trade. Stop loss, profit target, and timed holds all have to be adhered to. And then, of course, we give her 2 audibles to call. If the stock's not moving in the proper direction over time, she has the ability to pull the plug on it prematurely, even in, or whether or not it's a profit save, or in this case, a reduce risk. So basically what we're seeing here is the entry and what happens right after that entry is made. We get a little bit of sideways movement here. And, not a whole lot of patience in this one. Maybe a hold time of 23 minutes, 9:01 Central Time, exit time 9:24. So just slightly under 23 minutes there. But the tail sideways movement, right? Well, when Holly makes an entry, obviously the stop loss is going to be clearly displayed, the blue line corresponding with the entry line, and maybe a profit target, maybe not. Crunching this one up, I don't think we had a target on this one. But in any case, we did have very nice movement. So we get a little sideways action for the following 15-minute candle here. No sweat. Holly closes the trade, takes that 8-cent loser, because remember, this is a short. So she makes the entry here, covers it right here. Now, number one, that's what the stop loss is for, right? But when we get this slow sideways movement, and it even becomes more evident when we are looking at that 5-minute, right? So once again, on the oops, a little too fast there. Kick this back over to 5 minutes. All right, so we have a nice entry here and a lot more discernible on the 5 minutes here. We can tell a lot quicker, hey, it's just going sideways, making a run at that stop, but after that little wick, back down to this little level here. And that's actually a good sign when you see it kind of wick up and come back down. Those buyers tried to take it up, couldn't hold it, snap back down. Most of the volume is occurring in the candle bodies here. So this is just the classic pattern of going risk on. We see Holly closing the trade here. We're like, hey, a little sideways action, a little sideways motion. I tell you what, Holly, I acknowledge that you're getting out, but I'm going to go ahead and stick to my original stop, give this trade a little bit more time. And had you done that, you would have been rewarded nicely. Initial push down here, snapping back up to that entry line, right? We talk a lot about maybe do half and half. All right, well, if you're not really sure, of course, this one was one of the easier ones. And of course, I use that term lightly and in a relative sense. Trading is never easy. But once we see the same thing over and over again, well, then we can react with more confidence. So playing the half and half game here, we could have easily plugged out a half our position, taken that 8-cent loser or flat. hung on to the other half, and got this push down here. Now, second part of the equation, how long do we want to stay in it? We talk a lot about setting a stop loss for that second lot that you're going risk on at the break-even line, right? But this one would have come, probably got you out right here. That's why it's always a good idea to put them a couple of pennies above on the shorts, a couple of pennies below on the longs, just in case they peck along at it for a little bit. So, you know, tight one here, but we can see the majority of the move happened in the latter part of the day, probably corresponding with what we had here in the SPY, right? So one of the only risk on opportunities from Holly today was in that short on CAG. Now the next one here, stop hit, stopped out for 44 cents, ended the day, and once again this was a long on LQDA, ended up being up 73 cents. So this is what we refer to as a trade around, right? So since there are 3 Holly modules and maybe you're picking, you know, maybe you're sticking with one, maybe you're flipping around to the other ones, it's a little monotonous right now. And just while we're on that topic, we should be releasing the version relatively soon that will allow all the Holly modules to be on your desktop at once. So we've been getting that a lot from our clients. I am chomping at the bit for it as well. So hopefully that's going to be coming down the pipe pretty soon. But check out what happened here. Here's the entry line. About 5-10 minutes later, boom, we get that stop out. And maybe you were in this trade. Maybe you weren't. Maybe, you know, after a couple of trades, managing your stop losses, doing whatever else you were doing, get into the habit after the market's been open a while, an hour, 2 hours, scan the Holly blotters. Look at the ones that have just been stopped out or the ones that are getting close to a stop out. You know, and Steve likes to talk about this all the time, where sometimes it's the second cheese that gets the second mouse that gets the cheese, right? So if we weren't in this trade and we saw Holly get stopped out, your ear should perk up a little bit and go, okay, well, let's see how it acts off that stop level. Notice what LQDA did as soon as it stopped out. There's the big whisker, the big wick. Sellers took it down but couldn't keep it back up. So once we see that candle close, maybe we do take a second stab at it, right? One thing to point out, the statistical probability in all of these plays, it's good for the day. Sometimes the timing is off just a little bit. The timing was off by 81 cents was the stop, and the low of that candle is looking like 73 cents. So 8 cents, timing was off by 8 cents, right? But if we took that second entry, boom, we could have captured some of this. We always like to use the example of when Andy and I were new to the business back in the old days, called the 90s. You know, there was always a person in the office that we would play this exact same game with. You know, guys over there bitching and moaning about to get stopped out. We pull it up, notice that it looks good on the chart. We take the entry there, get a much better price, and enjoy the upswing. What were we doing? We were taking advantage of that guy's misfortune, right? Sounds kind of terrible, but that's the way it goes. And hey, the market is not a nice place to begin with, right? So now you've got a cyber version, and you've got 3 cyber people, 3 modules of Holly, where you can play this game. There was a trade yesterday, and I might revert back to it and look at the history, which, you know, it was the same version of CAG except to the upside. It hugged the line for a long time, and these bars kept tightening up. Now this one isn't exhibiting that tightening little wedge pattern, but there was one yesterday that was just beautiful. I mean, it was telegraphed for a long time, plenty of time to get in. So on this one, definitely a good example of what we could call a trade around. Once we see the stop hit, see that nice wicking action, take that second entry, and then boom, boom, boom. Now I see some questions popping through here. Let's see here. Yeah, Tony, it is, you know, as I was talking about earlier, even if you're just picking one module, you know, you got to really focus on it. You know, I can't tell you how many times I'm like, okay, I'm focusing on this module today, and then of course I've got other windows up, and I mean, sure enough, boom, 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 you're looking at your other windows, and you look over there, and you're like, that signal came out 10 seconds ago, it's already moved, right? And that happens from time to time, or a lot of the time. That is why, this is a good segue into what's coming down the pipeline. That's why we're giving people the ability to automate the Holly signals coming up at the first of the year, right? So in the future, if you're a Holly fan, you'll be able to automate these signals, and you won't have to worry about pulling the stock up, looking at the chart, wasting all that time. You'll just see the position appear on your blotter. So that's coming down at the first of the year is the target date, and it's something that people have been chomping at the bit for, including myself, for a very long time. So just know that that is coming down the pipeline. But in the meantime, you have to pretty much treat Holly as any other alert window. You're not going to get them all, but you're going to get some, right? And the benefit of Holly is that they all have pretty good statistical weight behind them.
Mm-hmm. And I'll also add, Tony, because we've talked about this before too. It's hard for somebody to like, oh, I developed this cool alert. I really love it. As a matter of fact, I got 3 of them that I really like, but I also want to follow and trade all of Holly's alerts too. And that's going to be difficult with any technology, because you're kind of all over the place. And this is why I say try to find a niche. I think a lot of people that trade Holly, that's all they do. They will just they'll just trade Holly calls, and right now it does flash for you, so and throw a new alert count up in the channel, so you can kind of quickly go over to the next segment and see what it was. Yes, there may be a 2 or 3 second delay by the time you see it, but should be plenty of time to act in many occasions. But Jamie's right. Yeah, in the future, you can probably, I would think, Jamie, they'll be able to choose which strategies too they want to, in other words, auto trade.
Yeah, I mean, it's going to be very flexible, and I see Waleed's question come in there about trading trade arounds, right? We're developing a whole new way to convey the information, right? I can't really go into detail because I don't have all the details myself. But for example, we talk about risk on, risk off all the time. Well, in the future, once this comes live, you'll be able to select the mode that you want to operate in. In other words, you can say, I only want to do risk off, or I only want to do risk on, or I tell you what, let's go risk on or risk off for the first half, risk on for the second half. That's going to be available in any combination that you want. You only want to go risk off, you only want to go risk on, you want to do half and half, all that's going to be available. It's pretty simple logic, but as Andy and Steve and myself can tell you, the divide between we trader types who aren't coders and the coders, what sounds like a simple thing to us many times is not on the coding side, because sometimes they have to dig through thousands of lines of code to find the right one, try it out, see if it works, make sure they don't break anything in the meantime. So it's all coming down the pipe. It's getting closer, and really this next quarter is going to fly by. It's going to be Christmas before you know it, and then New Year, new gear. So it's an exciting time to be a part of this product, especially with the AI and the advancements we're going to make in it. So having said that, let's just cruise on over to the one that did the best today, and just take a peek at some of the trades there, and then I'll turn it back over to you, Andy.
Okay.
So once again, things we don't see very often when sorting by risk on is more, even though we had more red here than green, the green covered it up a little bit, mainly because of this early trade about 7 minutes into the open here, which was a stop out, right? Okay, another perfect example of a trade around. Looking at 5-minute candles here, big wick up here, and then look what happens. Boom, immediate stop out. But look at this nice tight little consolidation here. I mean, heck, even if I would have been told about this by some other window or a person, when I see this, I'm interested, mainly because of the tight consolidation here. But you know what? This is always like a harbinger, right? Wham! Seller, the buyers got excited. Boom, got that little wick, came back down here. A lot of the times this can be a sign of what's to come. And when you have risk like this in place, I mean, why not, right? So, of course, if we're playing strictly by the rules, we have to use that wick as the high. But a lot of people these days eliminate wicks and use the candle bodies. Either way you do it on this one, it worked. You just got a lot less energy expenditure popping through here with a nice tight stop loss that you could have assigned down here. Just because we've seen this so much in the past, keep in mind, maybe you were in the trade, maybe you saw Holly get stopped out, but this is a gorgeous trade around opportunity right here, because as soon as we pop through here, went on through that entry line, another little dance right here, and even, if you're a candle body or wick person, I'm not going to mark them both up, even an opportunity to bolster that position coming through here. So even though Holly's showing a stop out, man, there was a lot of potential in this to actually get in that trade and do quite well with it. And the only reason you were aware of it was because Holly got stopped out of it, just like that guy that used to trade in Andy and mine and Steve's office.
Mm-hmm.
All right, so like you were saying earlier, Andy, there's just your itinerary is short, but it's chock full of information, and it was just kind of a weird, slow day today.
Yeah.
And
Yeah,
just not a
Yes,
whole lot of
it was
opportunity,
definitely
but
a funky day. Yeah.
yeah, but a little bit of opportunity, and not really any, maybe 14 cents of risk off here, and then just kind of chaos on the rest of the blotter.
Mm-hmm.
All
Yeah.
right, buddy.
Yeah. It was pretty sloppy. Yeah, I'll go ahead and take
Yeah, I'll
it
kick
back.
it
Or you're
back
gonna
over to
kick it
you.
back? All right. Lee asked a question. So if you want to see if I ask Holly to
Yeah.
automate a 2K, well, I can tell you right now. First of all, if you only have a 2K account, you're going to have to get some sort of incredible leverage. Probably go with some sort of offshore account where you can get some decent leverage, because that's so small, and I'm not going to venture to guess what percentage you can expect off a 2K account. But all we can say, is Holly has been outperforming, the S&P over the last 2.5 years, hand over fist, and so, we're going to have to wait and see. We're going to have
And
to wait and
Andy, if
see.
I might be able to chime in here on that topic, because this has been, a topic of discussion. Simply because if you have a small account and you're trading in a U.S. broker dealer, well, then you're subject to T+3 settlement
Mm-hmm.
date. So you got $2,000. I don't even know if they'll, what the margin is, if they'll let you, maybe get up to 4,000 in buying power. But regardless, once you spend that money, it's done. You got to wait,
Mm-hmm.
those 3 days to get access to those funds again. So that's only going to allow you to be in a couple of trades, right? And
Mm-hmm.
keeping, with the the premise that this is a statistical model. So, anybody out there thinking of automating, I'm not saying that you can't do well with an account of that size, but really, in the grand scheme of things, it's the day trading accounts, the people that have in
Mm-hmm.
excess of 25K in there, where you can recycle your funds quickly and not be waiting on T+3 all the time.
Right.
Because, hey, what if you automated Little Big Guy or Mighty Mouse, the smaller dollar strategies, but what if they're not working right now? What if
Mm-hmm.
those are the losing trades and the bigger cap stocks had a phenomenal day, so it was a great day for the module overall, but you were in, you got your hands tied behind your back. So,
Mm-hmm.
just some food for thought on that topic.
Yep. All right, great. He says he understands. All right, guys. So yeah, I was looking at this today, and I said, man, it's been a long time since I talked about this pullback above 50 SMA Pro. And this is a top list that you can find in Channel 4. Okay, if you are using the downloadable app. If you're using the web version, I don't think it has Channel 4 in it. We're limited to the channels on our web version. But yes, if you're using the app, you will have access to this top list. And just to give you an idea of what it's looking for, guys, I constructed this a couple of years ago. I get a lot of these ideas when a guy comes and talks to me about something he's looking for, because then my mind just goes to thinking. I start picturing charts, and this is one where looking for a pullback on a strong chart over, maybe pulling back for a 5-day period. Okay. So let's just kind of dissect it. I like to dissect these because this will give you a good idea when you're building yours what you can do to create some of these alerts that you're working on your own. So obviously it's a top list, which means there's no alert in it, okay? It's only a group of filters. That's why you see all colors here. There's no white background, there's no alert, it's just filters. So let's click the hide unused button and take a look at these filters. Okay, the price has to be over $5. Change from the 50-day SMA. This is just a real easy way to reflect only stocks that are having somewhat of a decent daily chart. Okay, let's take the SMA and look at this 50-day SMA. It's a 50-day simple moving average. So to be above it, that means, okay, the price is above its average price over the last 50 days. Okay, so it's trending up at least over a 50-day period. Now some of these won't look good on an all-time or maybe not even a 52 week, but we know at least over the last 50 days, if they're above that average, they got a pretty decent chart. Position in, I'm gonna skip this one and come back to it. Position in 5-day range. Okay, so I'm looking for stocks that are pulling back on the 5-day time range. So I put a maximum of 25%. Let's click our show me button, and it says the price is no more than 25% above the low end of this range. So we know it's in the lower quadrant of that 5-day range, that period. That's what we want. We know the stock is pulling back now. Position in year range, that's just another way I want to basically trading in the upper half of their yearly range. And coming back to this one, position in range, this is where the kind of the magic happens, because just the opposite of my 5-day range, I'm looking for stocks that are in the upper quadrant of their intraday range. Okay, that tells me by just thinking about these ranges, guys, you can picture the price action in your head. So by just thinking of this, and it's in the upper 25% of its intraday range. That tells me it tried to sell off, buyers came in and pushed it to the upper portion. That's, to me, is putting a very good, what I call setup bar. Okay, it can be a bullish setup bar. And the rest of this is daily volume. I'm looking for thick stocks. You can always bring this down. You can take this and make it and do what you want to. If you want to look at stocks above 300,000, that's fine. I like kind of liquid stocks. I use this for swing trading. So what I wanted to do, I said, well, you know what? I haven't done this in a while. Because I've been playing around with all these other new stuff we've been doing. I said, let me go in here and take a look at the stocks that came through here on Monday at the close of the day. That's what's beautiful about top lists. When the day closes, they freeze in here, so it's great for doing nightly homework. So let's see what you were looking at on Monday night. So we're going to go to historical date. My close, I'm on Central Time, so it's 3 p.m., 3 p.m. And we're going to put it on Monday the 24th and hit OK. And it's going to show me, this is what it would look like if you sat down at your desk and pulled up the software and you had this window open. This is what you would see and then on Monday night. Okay. First, just to show this is not only a great market that's causing this pin action. I want to show you this is Monday right here, this day. We can put our cursor right there and it's showing us 924. So really the market is actually down over the last, since the close on Monday. Very sloppy and choppy, but a little bit down. But let's take a look at some of these. Tony, I see your question. We'll get to it in just a minute. Let's take a look at some of these stocks, and I'm going to also go over the strategy and how this works, okay, how I would deploy something like this. All right, so let's just start from the top here, and we're going to cruise through, and let's go find Monday. I can just tell by the configuration here, by the candlesticks, that this is Monday. Put my cursor there, and come on, baby, there you go. There you go, 924. So this is what you had to look at on Monday. All right, this is the way the strategy works. I don't buy these on the day that they're creating the setup bar because we don't know what's going to happen. Okay, we're looking for some sort of reversal from this, from this downtrend over the last few days. So this is what I call the setup bar. Okay, so I want to see a green candle setting up very similar to what I showed you, in the configuration there, where this is a bullish setup bar closed in the upper 25%, but you can see it's in the lower portion of its 25, I'm sorry, the 5-day period. And it's well above its 50 here, so we're no problem there. Very strong chart. There's your 3 days of sell-off, actually 4 days, and then actually that was a green day there, but there's your setup bar. So for you new traders out there that are looking for maybe for a strategy that will help you in, and I like it for swing trading, but like I said, you're going to find some good day trades in this pattern, because those that are short, maybe the stock, when they do get the reversal, they're going to rush to cover, and then you'll also have new buyers coming in. So a lot of times this first move, when it takes out this high, can be very exaggerated. So it can work for day trading, but I like it for a swing trade. So once again, for swing trading, I'm going to use the analysis for swing trading. Here's your setup bar. When it takes out the high of this bar on the next day, like it did right here, that is your buy, okay? That is your entry, okay? So your entry is defined, and your stop theoretically should be the low of your setup bar. So as you can see here, this is a very great pattern. 4 days of sell-off, then you have a reversal. You don't want to buy these things as they're trending down, because you don't know when they're going to reverse. You're guessing if you buy it on this day. All right, so let's take, and I'm sure not all these are going to work. Okay, here is Monday on this one, and you can see there is your setup bar. You take out the high, nice 3 days of upward movement. Here is EAT. This is one where you got the setup bar right there. You did get triggered, and actually this is one where you would probably still be in, sweating it out, because it is pulling back. When I see a long, just for my personal preference, I don't like to see that setup bar to be very, very long, because I know my stop's going to be a lot lower. So this is where I may use my discretion. Maybe I make it a little bit tighter. Maybe I use a moving average or something like that, versus letting it come all the way back down, to the low end of that, wick. Take a look at workday here. There's a nice one. This is a pretty one, because look, there is your sell-off, and then it popped up on this day, tried to sell off more. Buyers came in, pushed it back above the 50. So your entry, when it took out that high, looks like it may have done it right on the open there, but there you have it. So, and remember guys, the market really hasn't done anything over this time period, and you're still finding some really good setups in this thing. HTP, there is one right there. There's your setup bar. You're basically just a little underwater on this one right here if you traded that one. This one, same thing. Yeah, this looks like it may have earnings or something. See this right here, if I see something, let me go, yeah, earnings was 4 days ago. So something like this I may hold off on. I don't like it like right after earnings when it has this kind of action, so I may hold off on something like that. But if you did apply this, you would be underwater on something like that. Adobe's working nicely. There's your setup bar, takes it out. So I just wanted to bring this to your attention. NVIDIA working but not doing much. Data, see, as we go through each one of these, you're seeing the majority of these things are working in a market that's not doing a whole lot. Now, had the market just continued to sell off over the last few days, that's you got to use your own judgment in something like this. Obviously when you're trading, you're not just looking at this chart, through with blinders on. You're paying attention to what the market's doing, what the peers are doing. You're paying attention to a lot of things, but this can help be a guideline to find some really good setups. And sometimes I forget how effective this thing can be. There's another one, and once again, the entries are so pure, and you define your stop. So all you're doing from that point on is you're hopefully managing your profits, or if it does roll over, you get a little nervous. I understand if you don't want to wait till that stop. That's where the other variables come into play. What's the market doing? What's the peers doing? There's another beautiful one right there. Nice hammer, pop up. All right, so I'm not going to just keep going through them. You can see what I'm getting at. These are very good setups, especially for traders who are new, looking for maybe a style. Maybe you don't want to be a scalper. You don't want to be a, geeked up day trader. Maybe you want to slow things down. And this is why I tell people all the time, our software is not just for day traders, man. You can build and find some really good stuff on swing trading level, investment levels, any level in which you trade. It's good in many different arenas. So with that said, I don't need to share this with anybody. Okay, obviously you can find it, this exact one in channel 4, but I did wanted to bring it to some of the people who are in here that may have kind of forgotten about this thing. And if you do like to do some swing trades, and you saw the examples of when the stock went through, how it can also be good day traders. You're welcome, Waleed. Yes, it can be a good one, and I'm going to start paying more attention to it. I got into building that composite rating lately, and got all into that, but started looking at this again today, and it's like, gosh dang, man, I got to start paying more attention to this thing. Some really nice setups in the thing. All right, well, Jamie, I think I'm about done for the day. I don't know if anybody in there wants, I didn't.
You want to quickly run over the, did you get to the dividend?
Oh, what was the question there? Yes, let's get back to this question.
We've got a filter for dividends, should be pretty straightforward.
Yeah, his was, let me see the question. Is there a way to search for stocks with dividends? Yes, Tony. It's a what's called a custom formula. But let me show you what I did. I actually built this for an advisor, a money manager, who wanted to get a look at it. And let's see, let me just type in dividend. I can't call it the yield watcher.
I think we moved it to production, the filter,
Oh, did we?
Yeah. Do a search real quick.
Oh, you're right. Let's do that. Yes. Oh, sweet. No, that's my custom. See.
Well, the yield, but the one up top.
We do have one for dividend. Yes, we have. You're right. You're right, Jamie. I'm sorry. We do have a dividend. Okay. If you want the dividend yield custom formula, okay, shoot me an email, and I'll get that to you. This is one I give you a good example. This is one I built for, like I said, this professional guy who wanted to see, stocks with not only the dividend, but you can see their dividend yield as well. So that Jamie's right. We do have a filter for dividends, but if you do want to see the yield, you'll need a custom formula for that. So just send me it's pretty sweet though. I noticed how this one's been selling. This has been down in the kind of dumps for a long time, even though it produces. So I'm sure a lot of people, you can see this kind of how this kind of been going sideways over the last 6 months, because I guarantee you this is almost a 6% dividend yield, and a lot of money managers are just throwing their clients in Philip Morris because they've been around forever and will probably be around for a lot longer. And they'll say, wow, I'll just stick my clients in that and earn them a nice 6% dividend yield. So Tony asked, like I said, shoot me an email or just send it to info@trade-ideas.com, and I'll look for it, and I'll get, if you do want the yield, you can send an email in. We have a little bit of time. I don't know. I didn't tell anybody this, so you may not be prepared, but if anybody wants me or Jamie to take a look at a chart real quick, we'll be happy to do that. Otherwise, I can bring Scott back in, and he will have a discount code for you guys who are interested and want to check it out at a discounted price.
And CLF comes through.
Oh, do you see something? Okay, I got to take mine down. All right, we do have a couple. Oh, Cliff. Last time I looked, Cliff was looking pretty decent, and it still is. All right, nothing wrong with this chart. All right, it is close to a year high. Uh, Everything's looking good. You can see how powerful it is. Over the last month, it hasn't even come back to touch its 10-period moving average. Now, we may have a date here soon, so I'd be watching that, see how it acts once upon, the bullish case is this thing goes sideways until this 10-period move is under it, maybe tomorrow or Monday, and then see if it can catapult it higher. No resistance. It's been a while since it's been this high. Nowhere near its lifetime high, but nonetheless, it's on a multi-year high. So nothing wrong with that at all. I will watch. This is a level. If it does break that 10-period moving average, you probably don't want it to fall. If you're bullish below this, that's a nice kind of pivot point. Now it came back and tested it a few times, and this may correspond to that high going back. Yeah, close to it over here. All right, let's take a look at HIIQ long at 12:35. Wait, did I read that? No, I'm sorry. It just says long. That's the next one. Okay. Yeah, that's Christopher. That doesn't look bad. I think Steve may have highlighted this one in our in the webinar on Tuesday. So that's what you're looking at right there. It didn't quite get up to that level right there, but you can see these 3 rejection wicks as it gets up here. There's no technical resistance here other than these 3 bars. You can see it's at a position in lifetime high, which tells me that's the lifetime high. So yeah, if it can get above that, I would want to see it do it pretty quick. Once they get up here and have a hard time poking through, sometimes the bulls will get impatient and bail. So, but other than that, yeah, it's a very, very strong chart. We'll do 2 more here, and then we got to go maybe 3 here. Long, Christopher from, okay, he's talking about Cliff. Okay, thank you. I thought that was, I was trying to think of a long symbol. Amron. All right, Amron, a gap and go there. Very, very strong, very strong. And once again, you can see, I always like having my lifetime range. You can see it's nowhere near its lifetime high. It's actually closer to its lifetime low. Position in the year range, though, but this is probably its year high up here. So this is one when you have this kind of momentum, okay, and I don't know if you're like a long-term investor or you're just a momentum player, but if it does, break this pattern of higher lows, in other words, if you get a bar reversal, sometimes the sellers, that's what they're looking for to start bailing, so you might get an excessive sell-off. But gosh, nothing wrong with there. It's very powerful. It has come a long ways, so I'm not sure where you're in from, but I could definitely see it taking a deep breath, maybe pull back half of this down to $12 range or something like that. But very, very powerful. One more here, and I think that is, nope, I think that's it. All right, guys, I appreciate it. Appreciate your time, and I'm going to bring Scott in here. Hold on for you guys who are kicking the tires. He will have a discount for you. Scotty.
Yay, thank you. Yeah, on the way out, though, let's all make sure that we have the ebook, 5 Ways to Win in a Post-BTFD Market, which both Andy and Jamie contributed chapters to. It's got 5 strategies that you can use to succeed when the market's rocky. Make sure, just plug in your email to that landing page, tradeIdeas.com/ebook, and you'll get the download link in your email. We got a podcast, should be a new episode coming out on Friday. Make sure that you're ready for it by searching for Trade Ideas Podcast wherever you listen to podcasts and adding us as a subscription. We are sold out of our regular tickets for the Trade Ideas Summit. We're looking forward to seeing a bunch of people on Saturday, October 20th in person. But you can go to tradeIdeas.com/livestream and sign up to get updates about how to watch the speakers live online and also get links to the videos following the event. Just go ahead and sign up for that. Then you get updates, and it should be a really good day full of insightful talks and panels. We've got a code for you, Alpha Studio. Use it before the end of the month. which is coming up pretty soon. So if you want to use this code, you got to get on it. 15% off your first month or year of Trade Ideas. And you can also use that if you want to do the upgrade from standard to premium. Just go log in off the top link on our homepage and go to change my account and use it. We'll have a recording of this up later on tonight or tomorrow, so keep an eye out for that notification tomorrow from GoToWebinar about how to find it. You can follow us on Facebook, facebook.com/TradeIdeasPro. That's the page to like there so you can see the updates. Any questions, send it to info@TradeIdeas.com. You can follow Jamie on Twitter @QuantBot. Steve Gomez is at Today Trader. We've also got some other handles like @TradeIdeas. Thanks, everyone. Thanks, Jamie and Andy. Have a good one.
Yes.
Thanks,
Thank
Scott.
you, Scott.
Thanks, Andy. We'll
Thanks
see you tomorrow in the support webinar, Andy.
Okay. See you guys there.
Bye-bye.